Good morning, Tracy.
Good morning, Solomon.
Welcome to the Land Tax Uganda podcast.
Thank you.
This is definitely a product of URA in the division of tax education. Course brought to you in partnership with the Public and Corporate Affairs team. And it's a pleasure and an honor to host you this morning.
Thank you.
Now, some people might be familiarizing with you for the very first time, and they are wondering who Tracy is. I can cheat the exams for them by simply introducing you fully. What we have here is the manager, policy, rulings and interpretation in the domestic taxes department, and also a Wood Mackenzie Prize winner. This is like the Nobel, but for people who are practicing tax administration. And it is a global prize. And we happen to have the pleasure of employing her as Uganda Revenue Authority. On my end, I'm Solomon Kimbugwe, the host for this particular podcast and the supervisor tax education content. It's a pleasure to have you this morning as we create content. And the topic that we are definitely going to be dealing with today is tax amendments for the financial year 2025-2026. Now, I know there are people who are probably having their very first go at doing business and people who are continuing on their business journey, and they would simply like to know, are there changes? If there are changes in the tax law, how are these changes affecting them? Are they favoring them? Are they frustrating them? Let's have a candid conversation.
Okay.
The very first question I have for you, Tracy, is the question of, are there changes anyway?
Yes, Solomon, there are changes for the financial year 2025-2026. But the good news is that these changes are in favor of the business community or the taxpayers, call them the public. For me, it feels like government has given back. For my 10 years in policy, I think this year was a turnaround for government. Government decided to literally give back to the public.
The government woke up and said, let the people do business.
True.
Amazing. Let's get into it. What does it look like? Especially, what would you say is one of the hotter government giveaways?
I should say there are about 2 or 3. The first being the Stamp Duty Act. In the Stamp Duty Act, we see government moving to remove stamp duty on agreements, mortgage deeds, and mortgage on crops. What does this mean? It means that as a business community, they're able to get financing easily because when you mortgage your property, you are not required to pay duty anymore. Previously, you would mortgage your land to get a loan for business and the government would require you to pay stamp duty on that mortgage. But now the government has said there's no need. Do your thing. Get the mortgage, get the loan, and run to work. The same to do with agreements. If you're selling property, you're selling business, you're buying a property, you're buying business, there's no need to pay stamp duty on the agreement for that sell or buy. And that also eases financing and business. For mortgage of crops, this speaks to the farmers, the agricultural sector, which is the backbone of Uganda. I mean, if I'm going to buy a farm and then I'm mortgaging, say, another farm or some properties, there's no need for me to pay stamp duty. So that is from the Stamp Duty Act. Now, when it comes to Income Tax Act, the government still said, oh, come home, we have this for you. Okay. So it exempted small businesses, new businesses, what the land called SMEs, and said if your total capital does not exceed 500 million, you'll be exempted from income tax for a period of 3 years.
But this one is clearly not for big boys.
No, it's not for the big boys. It's for the small boys. They're saying, come, you register, formalize your business, enjoy the business environment. We're protecting your startup. We're giving you 3 years to settle in. Then after the 3 years, we can talk. We can come in as government to get something from where you've profited and not necessarily from your business generally. So they're saying, and it's, another thing is it's for citizens. Because the public has been complaining that government is giving exemptions to foreigners, that the exemptions in the law favor the non-citizens. We are saying no. Now for citizens, come here as you start up, start young, from campus, you're a graduate, you've just set out for business, we're saying you're not going to pay tax for your first 3 years.
3 years?
Yes, all we require...
No income tax?
No income tax. All we require is go and register your business. Make sure the registration is this year or beyond. It should have been registered by 1st July. And then the investment should not exceed 500 million. And then you
opened my business in May. I don't qualify for this.
You just it in May, you do not qualify.
May last year.
No, you don't qualify. It's 1st July 2025 going forward. You register a new business and your investment is not more than 500 million and you file your return as required by the Commissioner General, you have a tax exemption for the next 3 years.
That sounds progressive.
Yes, it is. We also have an exemption for the Bujagali hydropower project. This has been extended up to 30th June 2026. Now, how is this going to support?
That's what I was about to ask.
I know the public is asking. When we have Bujagalis with a tax exemption, the power rates are little and the production is high. So it reduces the rates of electricity, and we all know and understand that electricity is a key factor of production.
So the thinking here is let Bujagali generate tax-free.
True.
For the benefit of
the manufacturer,
the person who's in business.
Community, yes. Because your cost of business will go low if the power rates are low. As opposed to if the power rates are high. It's a cost to your business because you're going to pay for power.
I wish there could be something similar for water.
For water, okay. Let's look at that.
Maybe
next year. Probably we should be able to consider and see what is in. Then the other one that probably is also to encourage and support the business from the income tax perspective is the exclusion of related party transactions from the digital service tax. Now, what do I mean?
Please, because that sounded like Russian.
Yeah, sure. We're saying that if you're a related party, say we have Stanbic Uganda, doing some online services for Stanbic South Africa, or we have MultiChoice Uganda doing some online services for MultiChoice South Africa. We all look at DSTV and all their platforms, their licenses in there that are classified as digital services under the Income Tax Act. So we're saying if they are related parties, they do not have to pay digital service tax because at the end of the day, the branch has some tax that it pays. So we don't want to burden the business community to account for tax at different levels, even between themselves. But also cognizant of the fact that you cannot trade with yourself. Yeah. So we're trying to ease and promote the doing of business by international companies in Uganda and elsewhere.
That gives us clarity, you know?
Yeah. I hope it does.
Do we have any other one within the income tax realm?
No, I think for income tax, that's about it.
Do you have something in VAT?
Yes. We do have a lot in VAT, actually. One for the business community VAT, we are looking at solar energy. We've gone green. And we're saying, okay, if you're going green, there's no need for you to pay VAT. Do your thing. Evolve. So we have an exemption in the third schedule that has been introduced, and it's being extended to solar lanterns.
This is the third schedule of the VAT Act.
Schedule of the VAT Act. For those who are new to the VAT law, the list of items in the third schedule of the VAT Act are exempt from VAT. Now, this is derived from Section 19 of the Act. Section 19 says that whatever is listed in Schedule 3 is exempt from VAT. So if you find an item listed in Schedule 3, it means there is no VAT that is applicable to that item. So previously we had deep cycle batteries, raw materials for the manufacture. So we've extended this to solar lanterns and composite lanterns, and also defined what it means. Yeah. Then the other one is to the garment industries. We've created clarity because previously the exemption seemed to sound that it's to the chemicals of the garments. So we've clarified that to read textile dyes and chemicals, then garment accessories. So we've expanded that exemption to appreciate the industry and clarify the anomaly.
You know, there's been a lot of debate around the garment industry. And I think this offers us clarity because the thinking out there is that the garment industry is one of the most overtaxed, for lack of a better word, industries.
To the contrary, it's one of those that has been overprotected. in the spirit of boo-boo.
Yes.
Because we have the best cotton, I must say, and I'm proudly saying that. Uganda has the best cotton. And you'll notice that most of the developed countries will actually get cotton from Uganda and manufacture clothes and sell them to us expensively. We also know that there are factories here that manufacture for very big brands like Marks and Spencer, but you will not find those brands on our market. So we are saying, look here, let's make it easy for you. Let's make your production and manufacturing cheaper, so even the wananchi in Uganda can buy quality clothes from you. And how do you do that? By reducing their cost of production. And they're saying whatever raw material you're using, the chemicals, the accessories, as long as you're in textile and garmenting, you don't need to pay VAT, because you're going to add value, and we want the VAT from the product that you're producing, which is a shirt, a dress, a trouser, and the like. Yeah, and also it reduces on competition on an international level, so it protects them. Then there's also an exemption for biomass pellets, and this is good for the business. This will go hand in hand with the billets. I don't know if most people know what billets are.
Please tell us what they are.
Billets are raw materials for making iron sheets, roofing tiles, and so many other things. So we are saying to the business community there who are manufacturing all these steel products, we do not want you to pay VAT on billets because they are raw materials. But on top of that, why are we making it specifically exempt? So that the manufacturers can get their input credit, or what we call administrative costs. Because while you're manufacturing, you're actually carrying quite a number of costs like water, power, stuff. So where you've paid VAT in all those costs, you're able to get input credit where the raw material is actually
exempt.
No, not exempt. So that's why we're removing them from the exempt schedule to make them standard rated, so that you can get input credit.
I get it.
Yeah, and reduce on your cost of doing business. Yeah. That's it in the VAT law.
Sounds good.
Yeah, sure.
Sounds good. What does it look like in the, particularly for manufacturers of excisable items?
Okay, excisable items, we're all coming from the place that, if you all know, excise duty is a sin tax. So it's literally imposed on items that are either dangerous to the environment or to our health. So this year we have excise duty on items like Kavera, plastic bottles, and then we're looking at cigarettes. The rate for cigarettes, in the spirit of
environmental preservation.
Yes, and health. Because if you look at the Kaveras, when you look at most of the water tunnels in Kampala City alone, we see that it's full of plastic bottles and Kaveras. So we said, look here, let's let the business community continue doing business in other areas of plastics that are valuable to the environment. For instance, you'll find that tables have plastic in them.
Cups.
Yes, cups have plastic, shirts have plastic materials. So instead of the previous provision that taxed any plastic and plastic granules, we said plastic granules are raw materials for various things, including water tanks, pipes, polyethylene bags, and all that. And we said, look here, some of these things are actually not hazardous to the environment. So we said, what is hazardous to the environment? Then we spotted Kaveras and plastic bottles, and we said, okay, we are going to tax these two specifically, and then exempt some plastic bags that are used for packaging, so that we also ease the business of whoever is using this Kavera to package food, maybe package beverages and all that. But as far as it's a plastic bottle that is going to be dumped in our water tunnels, we're saying please pay for it, pay for the damage to our environment. Then when you look at cigarettes, we all know that there's a rise in cancer, and cigarettes is one of those items that has increased the risk.
One of the key agents.
Thank you. So in the spirit of health and preserving the lives of Ugandans and many other people down there, we imposed what we call excise duty and increased. It has always been there, but we increased the rate.
How much is it now?
It's moving to about, I think, 5,000 per stick. Depends on the bundles and the type of cigarettes. Then they're split into whether they are locally manufactured or imported. So you'd have to look at the schedule for you to know the actual price, depending on the bundles, the number of sticks, and the like. And then the other item on excise duty I talked about was plastics. Then there's beer. Now the beer industry has a new structure of excise duty. So they will be able to look at the weight of water and the weight of alcohol to be able to know under which band the beer lies. So that's the new thing in beer. Yeah, and that's it also for excise duty, I must say.
So there's an increment on the excise duty payable on beer?
Yes, please. Because also beer is a danger. It's not healthy. It's toxic for our body. So if you want to pay for it, if you want to drink beer, give us some tax.
You need to afford it.
Yes, you need to afford it. It's a luxurious good, as we might say.
Sounds good. Is there more?
Excise duty, I think that should be really about it, because we've looked at really plastics, beer, and what did I talk about again?
I know there's also
That's it.
the Tax Procedures Code Act.
Oh yeah.
It usually comes with some very interesting amendments. It has been the norm year on year.
Okay.
Do we have some big ones
For
in this
TPC,
edition?
as usual, this year we have the extension of the waiver of interest and penalty. And this time we're saying we are extending it to 30th June 2020.
2026.
Yes, exactly. So
2026, 2027. 26.
26. I thought by now you know.
This is like the third edition.
Yeah, this is the third and final edition, we should say.
Government has been kind.
Yes, third and final edition. We want everyone to
What's the
benefit.
picture this time?
The picture this time is that if you have any outstanding principal tax by 30th June 2024, we are giving you up to 30th June 2026 to have cleared that principal. And once you pay that principal, the interest and penalty are waived. And this waiver will be automatic. You will not have to come to URA to apply for it or to beg for it. All you need to do is pay your principal tax, and the system will automatically remove the penalty and the interest for that period.
I just need to generate a PRN.
And pay your
I
principal
clear it
tax.
in the bank. and
sit
then it
home
will
and
be-
relax. Sit home and relax. And that
What if I can only afford half?
If you can afford half, it will be also waived on a half basis. If you say you have a tax liability of 10 million as a principal tax and you pay 5 million, the penalties and interest that will be waived will be to the extent of the 5 million that you've paid.
Now, I understand you've talked about the waiver ending on 30th June 2026. But what if I want to benefit from it now? What if I want to clear my thing today?
You pay today and your interest and penalty will be waived immediately today as you pay it.
Perfect.
The later
I don't
will
have to wait
cost-
for 30th.
You don't have to wait for 30th June 2020. We've just extended grace of payment, the period to pay to 30th June 2026. But if you pay today, it would apply to you. You will benefit from the waiver.
Do we have any other big one?
Oh yeah, in the TPC we do have. There's a big one for the taxpayers regarding the TIN. The taxpayers who have been suffering to get a TIN. And they will say, I'm being asked for money to get a TIN. We are saying, hold it up. There is no need anymore for you to pay anyone any money, because as URA, we don't charge anyone to acquire a TIN. So I was even wondering who is charging them for a TIN. A TIN is free. But look at it this way. We are saying, actually, once you have a national ID, you don't need to apply for a TIN because your NIN is a TIN. All you need to do is when someone asks for your TIN, give them the NIN and we're good to go. I think that should be good for the local man out there. Whether you're educated or not, most of us have the national ID.
Slow it down for me.
Yeah.
You are essentially saying that the TIN, is it a major issue, or we are saying that if you have a NIN, your NIN is as good as a TIN when you're dealing with URA?
When you're dealing with URA, we're saying a NIN is as good as a TIN. We're not going to give you a TIN because you're using your NIN as a TIN. So if you have a NIN, that's it. You don't need another number to say you have a TIN. Just present your NIN and that will turn into your TIN.
Perfect.
But also for the business communities, when you go to register your business, URSB will give you a business registration number. We're saying it's okay, you don't have to go to URA to apply for TIN. We're going to use your business registration number as your TIN. So I think that is good news to the business community because you don't have to go to URSB and then come back to URA to apply for TIN.
So you're saying the NIN being as good as a TIN.
Exactly.
We are also seeing the BRN from URSB
Yes.
being as good as a TIN.
Yes. And then wait for it. If you're an international company and say you're coming from the Netherlands, assuming it has a double taxation agreement to Uganda, which it does, and let's assume we have an automatic exchange of information agreement with them, which we should have, your tin in the Netherlands is what is going to be used in Uganda as your tin. We have no business registering you and asking you for another tin. Isn't that beautiful?
It's amazing. It speaks inclusion, it speaks ease of doing business.
Exactly. And then we are requiring that any local government or institution or regulated body should require a name before issuing you a business license. And we're saying that it's okay. Previously, we would require only a tin. Now we're saying if someone presents a name or a registration business number or a foreign tin and they meet the requirements we've set out, please go ahead and issue them a business license.
Let them go do business.
Yes, so that people are not stalled into the lines of, I haven't gotten a tin, I need to run to URA, I need to apply, I'm worried, someone might charge me for a tin, maybe there are kiosks out there that are charging people to apply for a tin. We're saying no, there's no need. You want to do business, you have a registration number, you're good to go. You're good to go. Do your business. So I think that should be very good for the public.
100%.
Yeah.
Tracy, I don't know if there is anything else that you'd just like to.
Last year we had the
give to the
business
small business
community
people.
going up in arms over IFRIS and DTS penalties. The good news is those have been reduced.
Okay.
We've cut on the penalties for IFRIS and the DTS.
What does it look like before? Like we need to be able to appreciate the differential.
The differential now is that we are saying we're going to double the tax due on the product or on the goods and the services. Previously, we had that specific penalty on it, let's say 6 million or exactly. But now we're saying if you had a bottle of water that did not have a stamp,
one carton,
then the tax that is on that carton is what we're going to double as your penalty. So I think that is workable because previously you get
it's realistic, it's practical.
It's practical. And that's what the community had begged for. So we served them what they wanted.
Sounds
to me,
good.
I think that's a win.
It's very progressive.
Yeah.
Someone can really say that government has really been mindful this time around, I must say, because we are seeing a lot of wins for the person who's doing business, especially the small traders.
True.
Is there any message that you would like to leave with that small business operator who is itching to start taking advantage of this?
I think to the business community there, what I can say is that compliance is usually cheaper. Yeah, and I would encourage them to comply and also run and take benefit of some of these tax exemptions, waivers, and the incentives in the law because they save you from the burden of penalties and interest for non-compliance. And we are always at your service. Reach out to any URA office, call our toll-free numbers, go to our social media handles, ask the questions. We have Buza Commissioner. Take advantage of all these avenues to educate yourself because there are only two sure things in life, taxation and death. None of us can dodge those two. So how about you indulge yourself and understand what taxation is about? Because it will surely happen to you in one way or another.
What you can't dodge, you must embrace.
Exactly.
That's what it is.
Yeah.
It's been an honor hosting you on the Land Tax Uganda podcast.
Yeah.
I'm looking forward to having you a lot more so that we are able to educate the taxpayers of this country.
The pleasure is always mine.
May you have a good one.
Yes.